Hey guys, it's Faysal with Costello REI Estate.
And Stephen Miglarese with Movement Mortgage.
We're here to talk to you a little bit about the pre-approval process, what you need to know. And Stephen is a rock star loan officer with Movement, so I figured he'd be perfect to come on here and kind of talk to you guys a little bit of what you need. So some of the common questions I get that I'm going to read off here to Stephen are, what are common misconceptions that you would say the average person has when thinking about, okay, I want to buy a house, I want to get pre-approved?
Yeah, I would say the biggest one is probably that you're pre-approved for a purchase price, not a monthly payment. So you would think logically that, oh, I got a pre-approval for $300,000. Any house that's $300,000 in purchase price, I'm approved for. But that's not necessarily the case, because how mortgage lenders do pre-approvals is based on monthly payment. So really what we're telling you is you're pre-approved for $2,000 in monthly payment, and that might equate to $300,000 on a house, or it might equate to $275,000, or it might equate to $315,000.
Okay.
So it's very important to keep that in mind if you're at the top of your price point.
Gotcha.
If you're shopping at the max approval,
yeah,
you want to keep your lender and your realtor together and communicating, so that way as tax values change, if there's homeowners associations involved, we're keeping track and we're making sure that you're not writing an offer on a house you're not actually approved on.
Yeah, and a lot of people don't know this. Homeowner associations can actually push you past your pre-approval.
Absolutely.
You know, if you're pre-approved for $300,000 and you got a $150 HOA fee, that's actually going to push you above that pre-approval amount. Now, would you recommend people that are approved for, say, $300K, should they be shopping in the $280? Because now we're seeing a lot of people submitting offers over asking. So what would you recommend for that? Would you recommend, shopping a couple hundred or a couple tens of thousands lower?
Maybe. I mean, I think probably it's a big portion of what's good for your budget. What we approve you for isn't necessarily what's going to be the best for your budget and your goals. So you always want to keep that in mind. But also, it's important just to recognize where you're shopping is going to affect how close to that limit you can get.
Yeah.
Just like you mentioned, homeowners associations. If you're shopping for a townhome inside Raleigh city limits, your taxes are going to be more expensive. You have homeowners insurance and homeowners association. That's all going to factor in. Yeah. Or if you're shopping out in Franklin County looking for an acre,
that's definitely
go for the $300,000, right? You're probably right at that price point and you're comfortable.
Awesome. All right. So our next question is, what does someone need to get pre-approved? What should they have in hand before calling you? That way the process can just move.
Yeah, that's a great question. So pre-approvals are very much a good information in, good information out situation. So I would say at the very least, you're going to want to have recent pay stubs, recent bank statements, W-2s, and complete the application. You're going to have to get your credit pulled. People are real sensitive to that. Yeah. Sorry guys, that's the price of admission. Yeah. Because we don't know what we're looking at until we pull your credit.
Now, I get this question from a lot of my clients before sending them to a lender. Hey, how bad is it going to damage my credit? Is it going to be a soft pull? Is it going to be a hard pull? What can I anticipate with letting a lender pull my credit? So hopefully you can touch on that a little bit.
So a good news, bad news situation. So a credit pull, when we do a pull for a pre-approval, it is a hard inquiry. So we are actually pulling your credit for the purpose of awarding you credit, versus where a soft inquiry or a soft pull is just looking at the history, but you're not actually asking for any new credit. So it's going to reduce your score probably by 5 to 10 points. But the good news is that it's worth it.
Yeah.
Because where you're seeing your score on Credit Karma or your credit card is not what we're going to see your credit score at. So when you might say, Credit Karma says I have a 750, a lender might see it at 720, which probably doesn't change much, but it's good that you know exactly what the lender's actually looking at instead of just what Credit Karma is telling you. Yeah. The other good news is that you have a certain amount of time from all the credit agencies to shop for the best rate or for the best provider. So if you're going and getting your credit pulled by 3 different mortgage companies, they're going to lump it together as one pull.
Oh, wow.
So that last one isn't going to ding your credit. It's just that first one.
So what would you say that time frame is if someone is serious about purchasing a home? Since the first mortgage lender has pulled their credit, how much time would you give them to, like, hey, you need to shop around to 3 different lenders, What would you say is that safe period? I know, maybe 3 months out, that's a little too far.
Yeah.
Would you say 30 days would be fair?
I would do it in 2 weeks.
2
So
weeks.
it's actually, for all three of the different credit agencies, it's a different timeline for each one.
Okay.
So it's the difference between 14 days and 45 days,
Wow.
depending on which score is the primary score that we're
Yeah.
going off of, right? So one lender could be on the 30-day cycle, and the one that they're pulling from gives you the 30-day grace. The other one could be on the 2-week period. So I would try to get it done in the first 2 weeks for sure.
Okay.
Get 2, 3, whatever you feel like is what you need to find a lender who's going to be honest with you, give you good advice, and get it done, and then go from there.
Go from there. So 2 weeks, guys. That's kind of the safe zone. Once you go past that, you're kind of in the gray area.
Yep.
So 2 weeks is kind of that perfect time period. And also, Stephen, what are some current trends you're seeing with pre-approvals, appraisals? Appraisals right now are kind of a controversial topic with people submitting over asking, hey, am I going to have to bridge a $30,000 gap? What would your input on that be?
Yeah, that's a good question. I see that a lot too. So I would say if you're in a situation where you're going over asking a lot, be prepared that your appraisal is not going to catch up. I feel like appraisers have done a pretty good job locally here, kind of trying to get caught up.
Yeah.
The market's been hot for years, not this hot though. So in the last 12 months, it just exploded.
Oh, yeah.
And appraisals can't keep up. If there's $100,000 over asking price, none of the comps are going to support that. There's a big difference between appraised value and market value. Where you're going to pay for the house is the market value.
Yeah.
What we're going to lend on is the appraised value. We're always lending on the lower of the two. So a lot of times if you're going way over asking, that's awesome. You found the house you want, but it might not appraise for that.
Yeah.
So be prepared to bridge that gap and cover the difference if you're going to be going way over asking. And that's something that your agent can better advise you on in terms of what to offer and how much over.
Yeah, I'd say a year ago, I'd be asking my clients, hey, are you pre-approved before showing them any properties? Nowadays, it's, hey, are you pre-approved? And how much money do you have on hand? 'Cause we're going to need it to play around here. Awesome. So how much should someone have saved up, would you say, in this market? Let's say they want to buy in Raleigh. How much do you think they should have saved up, liquid, ready to go if they were looking to purchase a home?
Yeah, that's a really good question because I get that a lot. So the minimum down payment that you can do is 3%. So that's if you're just not restricting to area, you're not a veteran and doing any sort of special program, we can do 3% down as the minimum. So I would say you need at least 3% and then closing costs. In this area, closing costs are probably about $4,000, $5,000, depending on what the taxes are in the house because that factors into it. The good news is as you go up in purchase price, the closing costs don't really go up that much. Which is also kind of bad news if you're shopping the $150,000 house because you're still paying $4,000 in closing costs, and it just feels like a lot more. Yeah. So I would say have about $4,000 in closing costs and $3,000 as a down payment. And then if we can find you either a house or a program that you're eligible for where you don't need the down payment, that's awesome. Cherry on top. But kind of be prepared to put some money into it.
Yeah. And what would some loan packages that are, the most common you're dealing with right now? Because I know a lot of people, say, hey, I got to get pre-approved, but they don't necessarily know what options they have on the table.
Yeah.
So what would you say those options are, and what would you say they need to pay close attention to when looking at those options?
So a very popular one that's a great program for no down payment, for instance, is the USDA. So 100% financing, you don't have to put a down payment. All you're paying for as a buyer is the closing costs. The catch is not every house is eligible.
Yeah.
So USDA is targeted for rural development, so they're only focusing on certain areas. So if you're in that position where you're like, you know what, I don't want to put a down payment or I can't put a down payment, you're a USDA buyer, you're not going to be able to look at every single house that comes on the market. You're going to be limited to only houses that are eligible.
Wow. So for USDA, would you say rates are adjusted because you're doing 100% financing, or are they pretty consistent with conventional loan?
No, they're pretty consistent.
Wow.
So the good news in that program is that you're getting great rates because it's backed by the government. So it's a targeted program designed to help people live in more rural areas.
Gotcha.
So you're not paying for it in the rates.
Yeah.
You're really not paying for it in any other way besides the 1% fee that the USDA charges, which you can finance in. So
Wow.
that still doesn't even add to your closing costs.
Awesome. So yeah, that was one example of loan packages. You also have conventional, FHA, and VA if you are a veteran.
Yep.
And if you guys are interested about learning a little bit more about the others, you can definitely contact Steven, and I'll have his information linked in the description as well. Is there anything you would want to say to someone that is thinking about purchasing, hasn't done the pre-approval process, that you've seen that, hey, if they knew this, wow, this could have been smooth?
Yeah. I mean, biggest thing, trust your agent.
Yeah.
We're working together for you.
Yeah.
We're a team, and we're going to get you a house, and we're going to make sure it's the best situation and the best fit for you. But just trust your agent. They're the expert. They know the market, and follow their advice, because they're trying to get you a house just like you are. They're not just trying to get you any house. They're trying to get you the house that you're happy with. So follow their advice is definitely my first recommendation. But be prepared.
Yeah.
Be prepared to do what's necessary to look for a house. You're going to have your credit pulled. You're going to have to get your financial documents together to give them to someone. You're going to have to do an application. The time to do that is not when you're standing in the house and you found the house you love. It's before.
Oh yeah.
Right?
Oh yeah. And a lot of people say, hey, I want to find the right house first, and then I'll start talking to a lender. Well, if you're looking in this area, that house is going to be sold by the time you call that lender. So you need to be ready off the bat. And one thing too, if you are pre-approved, make sure you're keeping your credit clean to that point of closing. I'm sure Steven here has some horror stories of people purchasing cars or taking another line of credit out, and that can severely affect your chances of still being approved.
Yeah, and ask your lender. Tell them what you have going on in your life. Tell them what you have over the next couple months, and ask them how it's going to affect the process. For instance, a job change may not affect it at all. If you're getting a promotion, if it's the same type of work, no problem. If you're quitting your job because you're tired of your boss, that's an issue, right? But talk to your loan officer, make sure that what you have in the works is not going to impede your ability to buy the house, and that you do it right, that you actually work through it in a way that gets you what you want in the end.
Awesome. Well, guys, you heard it here. If you are looking to purchase, I'd be more than happy to help you on the real estate side, and Steven would be more than happy to help you on the lending side. Even if you have any questions, reach out to us. And guys, thank you so much. Here from Raleigh NC, we'd love to help you out.
Thanks, guys.